Hello traders everywhere, Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Friday the 14th of December. So what are you doing for silly season this year? Basically, silly season starts on the 15th of December, according to my calendar, and extends pretty much to the first week of January. That is, the markets are very thin, and most traders, professional traders, have sort of left for the season or the holidays, the Christmas period, and or do what I'm doing, which is going for a cruise for a couple of weeks, going down to Panama and South America. So anyway, that's what I'm doing to relax. But we have a poll up there. We'd like to get your opinion, and certainly you're free to put whatever comments you are on the poll. So let's see what's happening in Washington. Basically, not much. I can't imagine when you have two people that detest each other as much as the Obama and Boehner do, getting anything done before the first quarter. So let's go right to our portfolio. We're going to be looking at Apple today because Apple's really being really the key to the market, certainly key to the NASDAQ. And we'll look at that market first of all. And here it is. We had a sell signal today in Apple. And you can see if I just put, there's the monthly that came in at 587. That was the big game changer. Now look at how far back we had to go to get a buy signal in Apple, all the way back here on the July 7th, 2011. That was the first buy signal we had. Nice ride up, and we got out right here. That was when the trend changed. So let me just scope that out for you just to give you a change. So the buy was on July 7th at 355. So the buy was right here. So it's July 7th. And it was at 355.13. So we go all the way up to here. And the sell was on November 2nd. Now remember, this is before the big news. People would just say, well, things, so just a pullback, we'd go back up, blah, blah, blah. But that was at 587.70. Okay? So that produced a profit of, so the profit on that one trade was $232.57. Now that's just using the monthly trade trials, nothing else, no other news, no other rumors, tips, whatever. That's just the straight triangles. Now if we scope this out, let me clear the screen up and let's get closer in and see what we've done just lately and why today's an important day for Apple as well. So let's go to 6 months and let's put our weeklies in because we use the weeklies for timing. Remember that? So the last weekly buy point we had was on the August 6th at 617. Okay, 617.98. And that was an exit right here. So let me just put that in for you. The exit right here was at 656 on the 2nd of October. So let's just put those signals in. Okay, so here's the buy right here. Because remember, the trend is up on the monthlies. At this point in time, the trend was up on the monthlies. So you only want to take the green trade triangle. So you get long here, and that was, that was long right at this level here on the August 6th. It was a buy at 617.98. Okay, you exited this position right here, and that was on October 2nd at 656, and that was even, and that produced a profit of $38.02. Very nice work if you can get it. But what's happened is you are out of the market here, and look what happened. Boom, right the way down. Plus you picked up a monthly red trade triangle. Now remember, the last signal we had on the Apple for a triangle was all the way back on July 7th of 2011. So this is an important signal. Now the market went down, certainly. You can see from 587.70, the market went down, came back up pretty much to the same level as we had the sell signal. You can see right here, and then boom, back down. Plus we get a red trade triangle, which means it's a short today. Minus 100. Who would ever thought Steve Jobs must be rolling over in his grave right now, is thinking that what has happened to his beloved Apple and why it's losing shares and all kinds of things to its competitors. And it's become a patent fight suiting company now as opposed to innovation. And that's the key, what people want to see in the market. So just using the weeklies, let's just clean the screen. Just using the weeklies alone and the monthlies, you would have made since the beginning of 2012 till today, you would have made a profit of $479.34. That's a profit this year alone. Okay, that's using the trade triangles and just using the timing, the weekly for timing right here, and the monthly for the trend. Okay, so it's trend on the monthly, timing on the weekly. If you do that, you would have done extremely well in this position. So I think that's the key thing to remember. Just keep that thought in mind, and you'll see just how well you can do using the trade triangles. Now we're coming up to 2013. It's silly season right now, so nothing to do but take advantage of the special offer we have on Market Club right now. So give us, Melissa, a call, 1-800-538-7424. Ask for Melissa, and we'll get you set up with a special deal for 2013. But give us a call today. So anyway, that's Apple. Very, very successful in trading with the trade triangle. So let's go to our normal look at the markets, and we're going to go back to our portfolio. And we're going to look at the S&P 500. Now, the S&P 500 is really kind of a little bit hesitant now. It's sort of looks like it's beginning to roll over like this. The trade triangles certainly are mixed. You've got let me just bring those up a little bit closer so you can see them. The trade triangles are somewhat mixed. Oops. And let's just do this. Let me just clear the screen for a second. So the trade triangles are somewhat mixed. You've got the monthly down, the weekly up, and the daily down. So really the two to look at right here are, don't look at the daily. That's not important. But what's important are these two markets. So the trend, as I just mentioned to you, the major trend for the equities as we see it right now, right here with the monthly, is down. That's the trend we see it. The intermediate term trend is up. So this is a neutral position. That gives you the 55. It's a trading range. Okay? Now the one thing we said yesterday was the fact you have this bearish divergence right here. Markets making new highs, and you're seeing new lows on the Williams percent R. Not a good sign, okay? So generally speaking, I would not be surprised, as we said yesterday, to see this market come down to the 1400 level and maybe the 1390 level. Remember, it's silly season. Anything can happen. So I'm not going to be held to these predictions, but generally speaking, you're in a trading range, and you should treat it as such until a defined trend becomes obvious to everyone, or becomes obvious to our trade triangles. So let's just go to our next market. And this is the Dow. And much the same picture in the Dow. You had basically a reversal a couple of days ago, and now we're coming down. This is on Wednesday, of course, when we had the little doji, and we're coming down. That was confirmed Thursday, and of course we're a little bit lower for the day. But for the week, we certainly are looking a little bit higher, which is good. And not much, though. That could change pretty rapidly. So let's go to our next market. Now, this is the NASDAQ. Now, remember, the Apple is a major component with the NASDAQ. And you can see that's fallen. That's actually lower on the week right now. And you've got the divergence based on our Williams percent R right here. You can see it's going up here. What you look for in divergences is prices going higher, like they are here, like this is going higher. And you look for the momentum going lower. So the momentum does not match the prices. That gives you the divergence, and of course you can see we're coming down now. So I would imagine this is going to be on the defensive. And how far could this market go back down? Well, let me just give you a clue. So let's just clear the screen, and let's take our Fibonacci tool, which is right here. Very powerful tool, easy to use, and this is how you use it. So you just click on the highs, pull it down to the lows, the recent lows, and what Fibonacci does, it gives you retracement levels, because for every cause there's a reaction. And you can see the pullback. We could go all the way to 2009.22 or even 2,900, which is a 61.8% pullback. So it would not be surprising to see the market pull back here. So again, this is silly season. You should take it for what it's worth. So again, take the poll, vote. Are you going to trade through silly season? Are you going to take a trip? Or are you going to just be spend time with a family? You decide what you want to do. It'd be kind of interesting to see how you all think of this particular time period of the year. So let's just clear the screen, go to our next market. We're going to be looking at I believe it's crude oil, but yeah, crude oil January. Here it is. Very, very flat market. You can see how this market is just beginning to build this base. And I do have a market will surprise you when we look at it today, which market it is. But again, you've got a little bit of a divergence here. Not very much. It's not as powerful as the equity markets, but you can see we have made new lows here. But chances are we're going to see this market rally on the upside. You've got a mixed bag. You've got both the weekly and the monthly. Now with commodities, we use the monthly primarily, okay? So the monthly and the daily are in conflict, which means we use the weekly right here for trend, and we use the daily right here for timing. Now, when you see a mixed bag like this, which we're seeing, it means it's basically a neutral position. You should not be in the market. You want to wait until you see something else happen. Mainly, the weekly turn into a green triangle. That's what we're looking for. Looking for this market to go into a green triangle. When we see that happen, then we want to be a buyer, not before. So let's clear the screen, go to our next market. And the next market we're looking at is going to be, I believe it's going to be the euro dollar. The euro dollar is in new high ground for the move. And this is bullish. It means the dollar is really not doing well at all. This is happening on a weekend, which means you could see a lot more play on this market. So if you just do a close-only chart, boom, we're in new high ground here. And let's scope this out even further. Let's go a year. And we're not at 52-week highs, but this is a very good sign for this market. And look, we have been long this market for a long time. Here's the weekly, which was cover the position. The monthly kicked in. We got out. We got back in again at 129.86, and here we are at 131.66. Looking good. Market's trending very well. That's a great way for this market to close on the weekend. Terrible, terrible, terrible for the dollar. And again, once again, they're sacrificing the dollar for the sake of politics, and it's not a good thing. So generally speaking, bullish on this market. Looks like it wants to go higher. So let's scope this into the next market. And this is gold. Gold has been surprisingly quiet during this period. And if we just scope this in, let's just do 3 months, you can see it's just really kind of going nowhere to speak of. This obviously we'll have to decide what's going to happen here. But generally speaking, this level here, the 1690 level is very important, as is the 1680 level. So I think for the moment it's 60, which means it's a trading range overall, and we're at the lower end of the trading range. I expect we'll probably see a pop here, maybe on the upside, but I would be more concerned about the markets in general here. So let's just see what happens. Nothing saying it's going to go up. It just is oversold and at the lower end of its range. So we'll see what that plays out next week. Spot silver. Spot silver took a huge hit yesterday. It's down again today, new low ground. We may be close to a Fibonacci retracement. Let's pull that in. And this is where the Fibonacci tool really, really shines. So let's just put that in. And we go from the highs here all the way down to the lows. And we're getting very close to this Fibonacci. 3206 on silver. It's 3221. I would say, generally speaking, if you get down there, it's definitely worth a shot to be a buyer, because you've got the weekly and the monthly. Only the daily is down, but you're buying at a Fibonacci retracement level. If you want to be a little bit more conservative, just wait a couple of days and see if you can get the red daily triangle to turn green. If that happens, then you're in great shape. So let's move on to the next market, and that's copper. Copper is acting, I think, pretty well. It's generally speaking, it's going to be pretty much flat for the week, but it's still, if you just put a close-only chart, you can see it's still doing pretty well overall on the trend. Plus 85 is a bull market, and again, you should be out of this market if you're following on a weekly and daily routine. Weekly for trend, daily for timing, you're on at 3.65. So again, that's what we're looking at, and I think that about wraps us up for the week. Obviously, we're starting silly season, so be prepared for that. Hey, I'm Adam Hewison. Have a great weekend. Every success trading. And remember, give Melissa a call. We have a special on the memberships right now for Christmas. So give Melissa a call, 1-800-538-7424, and she'll be able to help you. Have a great weekend, everyone.